Hello and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at Berkshire Hathaway, and I am back with your local news for the month. It is October 2024, which, man, this year is flying by. It's almost Halloween, which is one of my favorite holidays, so I'm really looking forward to that. But I'll go ahead and jump into these slides here. We'll get going. So October 2024, I do have a class coming up in November. It won't be the down payment assistance class. This will be a quick, like 1.5 hour, depending on how many questions there are, class webinar. More details coming out on that soon, but save the date, November 21st at 6 p.m. If you are thinking about purchasing a home in the next year or so, I highly recommend that you come to this class. There's so much valuable information. I'll be teaching this with one of my lenders, Ashley Buelva, and we would love to have you there. So stay tuned or shoot me a message if you're interested, and I'll keep you in the loop when we get the event posted. And I do have my fall buyer and seller guides available. So, and there's also a first-time home buyer guide that I can just send over via email or message or however I can get you a PDF, or I can mail it to you if that's easier. But if you want one of these, reach out and I will get you a copy. And into the news, Seattle area home shoppers find some relief in shoulder season. We have way fewer home buyers in the market now than we did a couple years ago. We're in a different environment now. So there's fewer home buyers out there looking for homes, but those who are still searching, the hunt is getting a bit easier. There's a little bit more inventory right now than there was last year. We're seeing a few more homes coming to the market, and rates have come down a little bit from where they were earlier this year. There's just fewer buyers out there. So homes are starting to sit on the market a little bit longer. The supply of King County homes relative to demand was at its highest level since before the pandemic in September. So we have more homes on the market now than we have had in a while. Pending sales were up across the Puget Sound region in September compared to a year earlier, but remained well below those 2019 levels. Home prices pretty much flat August to September and up in most areas from a year earlier. Median King County condos sold for just shy of 560, 559, up 8.5% from September of last year. Those are mainly due to Seattle and the East Side, but overall, buyers are finding more homes to choose from. Number of new listings in King County was up 19% from a year earlier. It would take 9 weeks to sell through all of the available single family homes in King County last month. So a little bit more time on the market for homes. Here's that price activity over the past year. So up slightly in King County, but nothing drastic. It's moderated from what we've seen in prior recent years. For home sales, this is the number of home sales, down just a little in Seattle, but here in the South End, we are down a little bit in Southwest King and up a significant amount in the number of home sales in Southeast King County from 1 year ago. For condo sales, we're pretty much even on Southeast King, and Southwest King is just slightly fewer home sales this year than compared to last year. For home prices in the South End, we have grown just a little bit, but nothing crazy. For condos, we're pretty even on Southwest King, a little bit of a price gain year over year, and Southeast King has actually come down just a little bit from where they were last year on prices. We've talked about the lock-in effect. These homeowners are sitting on these really low mortgage rates, and they're like, well, I would move, but I'm going to be paying so much more than I'm paying for my current mortgage because I have this super low rate. And a lot of sellers are locked into the house that they are currently in. They don't want to give up that super low interest rate to move on to the next property. So as mortgage rates dip, we will see a few more homes come to the market, a few more buyers come to the market, probably more than a few. There's not going to be like a drastic dip in rates, but it'll be gradual over time over the next few years. I'll talk about that more in a minute. Less demand also means buyers can find a deal. This is the time of year when homes sit on the market a little bit longer. That happens annually. and sellers get a little anxious and want to move on, and they're willing to give buyers a little deal or include contingencies that they may not have otherwise earlier in the year when the market was a little bit hotter. So now is the time of the year to find a deal in the fall and winter. October typically marks the high point of unsold inventory. And that brings us to our hyperlocal breakdown. For Kent, Renton, Auburn, and Federal Way, this is new listings coming to the market. We did see a tick up from last month in Renton and up 61% from a year ago. Kent's up 18% from a year ago, but down from last month. Auburn, Federal Way, both down from last month and relatively minimal change from a year ago. For pending sales, Renton were about flat compared to last month, and all of the other areas did bump up in the number of pending sales. My guess is that that is due to the drop in interest rates that we saw over the last little bit and people taking advantage of that dip. Median days on market, so the number of days that a house sits on the market before it's sold on average. Kent and Renton are right around 11, 12 days. Auburn and Federal Way, homes are sitting around a little bit longer, 25 and 33 days on the market on average. And for median sales price, we did jump up a little bit from last month in all areas, which is not what we necessarily expect to see this time of year. But like I said, that dip in mortgage rates did allow people to have a little bit more purchasing power. Federal Way did drop off a little bit from last month, though. Pretty significant for a 1 month drop, but we'll see what happens throughout the rest of the year here. Unless interest rates go down crazy a lot more than I expect, I'd be surprised if these prices keep going up into the end of the year. But who knows? They may. Mortgage rates are one of the most difficult things to predict in the real estate market. And that brings us to mortgage rates. So last time we met, our 30-year fixed average was 6.20 and the daily rate was 6.14. Looking at this week's weekly average, 6.32. So it did come up some from last week. It was 6.12 last week. And a bunch of reasons for that. The Federal Reserve met and they did decrease their Federal Reserve rate by 0.5 point. So that is good news to see. But by the time they did that, everyone was expecting them to do that. They were pretty much telling us that that's what was going to happen. So those discounts had already been built into the mortgage rates. And then just based on the other factors, which there are so many, interest rates have come up since that Fed meeting, which surprised a lot of people, but it will bring things down over time. We should remember that the rise in rates is largely due to shifts in expectations and not the underlying economy, which has been strong for most of the year. And this is Freddie Mac's chief economist. Although higher rates make affordability more challenging, it shows the economic strength that should continue to support the recovery of the housing market. And the Fed did signal that they expect to have further rate cuts throughout this year and in 2025. So overall, we do see the rates are going to go down in the long run, but we did have a little boost up, almost flat since yesterday, but up a little bit. And we're at 6.64 for our daily rate. You can see this drop down at the beginning of September, and then we hung out between 6 and 6.25 throughout most of September, and then October hit and we jumped up a little bit and will gradually trickle down, but there will be some more of these bumps in the road as we head forward because there always is. And this is zooming it a little bit further, looking back to March 1st, 2023. So we have come down quite a bit from our peaks, but we did have this little jump up this past week. And US inflation reaches the lowest point in 3 years, though some price pressures remain. I just threw this in here to touch on it. High inflation is the enemy of mortgage rates. So seeing inflation reaching more of a maintainable or what we'd hope to see, getting closer to the Federal Reserve's 2% target. Car insurance is pushing it up. Housing, it could be worse over the pandemic years. This column was definitely a lot higher but a lot of these are dropping because the gasoline has come down so much since a year ago, and gasoline prices kind of affect everything. So just a couple quotes thrown in here. We expect the economy to land softly and housing inventory to continue to recover. This should put downward pressure on mortgage rates this fall and winter and will set the stage for a much better season for home buyers in 2025. And that's the senior economist at Realtor.com. And from the chief financial analyst at Bankrate, Fed interest rate cuts in general will bring about lower mortgage rates, which is a definite boost to the housing market, but it won't happen overnight. So this is kind of what I was saying when I was talking about the rate going up last week, is that this will take time. All of this is going to take time, but overall, we're on the right trajectory. Here's a few predictions for what is going to happen over the coming quarters. Fannie Mae, MBA, Wells Fargo, and we have the average of all three. So it's looking like we're going to end the year right around 6.18, according to these projections, and next year at about 5.68. So it'll be gradual, but rates are expected to tick down. And here's just that on a line chart. And more than half of homeowners would be motivated to buy with rates under 6%. So they did a survey, and homeowners would be much more willing to sell if it was less than 6%. Over 1/3 of homeowners would be motivated to move with rates under 6%. It means that as we get those lower rates, we will have more homes come to the market, and looking forward to having a little more inventory to choose from for buyers. This is looking back at previous home sales. We had a lot during the pandemic, so this is significantly higher than we would expect to see. And this year, we're projected to end right around the same point as we did last year. But looking forward, those projections are looking at going up to 5.4 on average next year, the average of these three predictions. So more home sales next year, looking to see more activity in the real estate market. And generally when that happens, prices go up. Waiting until next spring or summer should also give you more inventory to choose from, but you'll likely be up against greater competition since it's the peak buying season. So this is an annual thing that we see more activity in the spring and summer, less activity in the fall and winter. Prices going up in the spring and summer, prices softening a little bit in the fall and winter. As far as home price projections for next year, we are all over the board. Moody's down at 0.3, all the way up to Goldman Sachs at 4.4. But the average of all 10 here is 2.6. So much more moderate price increases than we've seen a couple years ago. Just one last quote here. Even if the average national home price forecast for 2025 is correct, it is possible that some regional housing markets could see mild home price declines, while some markets could see elevated appreciation. That has been, after all, the case this year. So yeah, it may vary from market to market, which is why it's important to have a real estate agent that is educated on the market in your area. There's different markets take different strategies, and it's important to know what's going on so you know which strategies to employ. And just a last plug for those fall buyer and seller guides and the home buyer guide. If you want one of those, just reach out. And my upcoming class, save the date, on November 21st at 6 p.m. If you have any questions, please feel free to reach out. My number and email address are on the screen there. I would love to have a conversation with you about the market in your area, or maybe a place you're interested in moving to. Just reach out. I would love to have that little conversation, grab a cup of coffee or something. And that's all I have for you today. I will see you back next month, November, for your October recap once those numbers are out. Thank you so much for joining me. Have a fantastic month, and I'll see you next time.